Today, we're diving into a critical topic that could shake up the entire crypto market: the Federal Reserve's interest rate decision. How will this decision impact Bitcoin's price action? Well, stay tuned as we break down the potential effects and what it means for you as an investor. First up, let's unpack what the Fed's decision actually means. The Federal Reserve are set to decide whether to adjust interest rates, a move that has far reaching implications for the economy. But how does this relate to Bitcoin? Well, the Federal Reserve is set to make an adjustment to the interest rates. This decision is part of their ongoing effort to control inflation and stabilize the economy. Higher interest rates generally means borrowing costs increase, which can slow down the economy activity. However, lower rates are intended to stimulate borrowing and spending. But the question on every crypto investor's mind is, how will this affect Bitcoin? To understand the potential impact, we need to look at the historical context. How have previous rate hikes affected Bitcoin? History might just give us some very valuable insights. Historically, Bitcoin's price has shown mixed reactions to interest rate changes. For instance, during the last major rate hike cycle in 2017, Bitcoin experienced significant volatility, but also reached its all-time high of nearly $20,000. This suggests that while interest rate changes can create short-term volatility, they might also set the stage for a major price movement. Investors often view Bitcoin as a hedge against traditional financial systems, and rate hikes can reinforce this perception, potentially driving demand. But what is different this time around? The current economic climate plays a crucial role in how Bitcoin might react. Let's dive into some of those specifics. The current economic climate is characterized by high inflation, geopolitical tensions, and post-pandemic recovery efforts. These factors create a complex backdrop for Bitcoin's price action. Higher interest rates can lead to a stronger dollar, which often puts downward pressure on Bitcoin as it becomes more expensive relative to the fiat currencies. However, if investors start losing faith in traditional assets due to economic instability, Bitcoin could benefit as an alternative store of value. The interplay between these forces makes predicting Bitcoin's reaction a bit tricky, but also highlights its unique position in the financial ecosystem. Next, let's consider investor sentiment. How are the current and potential Bitcoin investors likely to react to the Fed's decision? Sentiment can drive market movements, so it's essential to gauge this aspect. Investor sentiment around Bitcoin is currently mixed. On one hand, there's a growing community of long-term holders who believe in Bitcoin's potential regardless of the short-term fluctuations. On the other hand, some traders are cautious, worried about the impact of tighter monetary policies. Recent surveys suggest that while some investors are reducing their exposure to Bitcoin in anticipation of higher interest rates, others are doubling down, viewing the dip as a buying opportunity. This division in sentiment can lead to increased volatility as market participants react differently to the same news. So, what do the experts say? Predictions from financial analysts and crypto experts can provide some guidance. And well, experts are divided on the exact impact of the Fed's decision. Some believe that Bitcoin could see a short-term dip followed by a strong recovery as it solidifies its status as digital gold. Others warn that prolonged higher interest rates could suppress Bitcoin's price for an extended period. However, there is a consensus that Bitcoin's long-term prospects remain strong due to its growing adoption, finite supply, and increase in institutional interest. As always, it's important to stay informed and consider multiple perspectives when making investment decisions. In conclusion, the Fed's interest rate decision is a major event that could impact Bitcoin's price action in several ways. While the immediate reaction might be volatile, the long-term outlook for Bitcoin remains very positive. Whether you're a seasoned investor or new to the crypto space, understanding these dynamics is crucial. So let's jump down into the charts and I'll share my Bitcoin price prediction. Okay, so here we have Bitcoin paired up with USDT. We're on the 1-day Binance chart for this analysis. And following on from this morning's video, you can see that we have a reversal from hitting our expected range at 66,700 to 67,900, right? We hit that range and we got the reversal to the upside. Okay, this is the 50 SMA, the yellow line coming through here, acting as a clear support for BTC. Now, with extreme volatility, and obviously this is being pre-recorded, so you will obviously see a little bit more of the volatility than I see right now, but my expectations are that the interest rate decision will be neutral, as in there will be no changes to the interest rates over in the US. And as such, I am expecting to see some volatility. We might see a little bit of a move to the downside, but ultimately thinking about a move upwards for a bit of a relief rally. And the reason and the rationale behind some of this is that we actually saw a bit of a sell-off yesterday, as we had a lot of kind of fear in the idea that actually there might be a rate cut coming, which would basically see a much more bleeding in the market. Now, I know that there are a lot of other influencers and analysts out there kind of saying that the market's going to bleed either way, whether there is a hike, whether it stays static, or whether or not the price or the interest rates do in fact drop. Ultimately, everyone's kind of looking at the market through bearish lenses. And I think actually what we're going to do is we're going to have a bit of a relief rally. Now, if we do have a relief rally, where do we think things are going? Well, I would be thinking that it's going to be a rally of significance, and I'll be looking at potentially pushing up into new all-time highs for BTC. Okay, so we are talking about up here towards that 73,777. And if we do break out of that range and go into a new all-time high, we're into price discovery, where we obviously then start to reassess the situation and so forth. Now, there's lots of other ways that this can go, but for the most part, we can see that we've had a pretty decent three-wave correction here going across the time, pretty much from the 21st of May through to, well, yesterday. And so the market's actually quite ready for a bit of a run to the upside. We can see that the stochastic RSI is come down quite nicely. It still can obviously be down here for a bit more. It might take some time before we get a relief rally, etc. But my expectations are that today is going to be a very volatile day, where we do see this come down deeper, crossover, and start to actually get a run back to the upside when it comes to BTC's price action. Okay, so knowing that our market is very interested in, or the market itself has been trying to price in the idea of a rate cut, I think it's very unlikely that we're going to see one, even though there's a bit of pressure on the Fed now to actually cut interest rates in the same way that we've seen with the European Central Bank and so forth. But my expectations are that we have a relief rally, and we'll be looking for that move up towards 73,777 or higher, going into price discovery mode for BTC. Now, when the rate cut does come, which will be at some point in 2024, in my opinion, that is going to be a huge catalyst for massive move to the downside. Now, should the Fed do something unexpected like cut rates today, then we won't have that relief rally. We'll just see a continuation in bleeding in the market. Okay, and I would be looking more towards that 200-day EMA at $57,000 for brief support, should that be the case. So if the Fed do in fact go ahead and cut interest rates, we are going to be looking at this move in the market where we are going to be very aggressively moving down in Bitcoin's price action, which will of course span across the entire crypto space as well. If there is no change to interest rates, historically speaking, the market has loved that. Okay, the market has actually really been favorable to no changes in interest rates. And as such, that relief rally upwards into new all-time highs, I think, is a real possibility. Okay, so where we are right now is basically placing your bets. We've already seen $35 billion in open interest, and that is going to obviously either cause cascading liquidations, which will propel Bitcoin's price upwards if we do actually liquidate all those short positions. And likewise, if we do start to drop on down, we'll have cascading liquidations on those long positions, pushing the price even further down. $35 billion trillion in open interest is definitely not something to be taken lightly. So knowing that the outcome of this decision is going to have a very significant impact on the price action is something to be very cautious about. And that's not to say that you need to be going in really heavy on leverage positions, doing 100x longs just because you feel like gambling on the market. It's about waiting for the confirmation of a move in a particular direction and taking advantage of the volatility as you see it. Okay, this is definitely not one for the faint-hearted, in my opinion. There's a lot of money on the line, and the interest rate decision is going to be critical in the price action as to whether or not we get that next big run to the upside into new all-time highs, or we break down towards that 57,200-day EMA. There's lots up for grabs here. Now, guys, I'm going to wrap this video up right there. If you found it useful, smash that like button. If you're new, subscribe. And if you haven't done so yet, check out this morning's Bitcoin video where I go through things in a little bit more detail. Until then, have a great day.